Okay, the reason why I'm giving this little webinar today is just to sort of give you an idea of how I go about writing my daily newsletters and show you some of the charts and how to read them. We're going to do this real quick. Shouldn't take more than 10-15 minutes tops. Let's start first of all with what one of my daily updates looks like. Many of you have seen this. I'm going to show you why I pick the levels I do. We're just going to work with the S&P today. So the first thing I do every morning, well actually every night, is I look at some daily levels. Okay, this is my daily worksheet. Each box you see here covers a value area, which is roughly a 70% or a standard deviation of volume around the mean, and the mean being the high volume price of the day. And you can see here this green line is what I had as my pivotal point today. And the reason why I chose that as a pivot is because it was the top of value from Friday. The green box here is Friday. And you can see how many times yesterday, these are 30-minute bars, how many times, at least 6 or 7 times, the S&P moved down to this level right around 1366 or 1365.50, and buyers defended it. So the reason why I chose this level, hey, if buyers defended that yesterday and there's positive momentum, my guess is that they'll be there today. And actually, that did occur. I mean, if you bought that pivotal point, which I believe I mentioned in the first visit to the pivotal point, I mentioned that in my update today, that would have been a good short-term trade. The issue that I have with writing these daily newsletters is that the time frame matters to the trader. So if you're a day trader, this is a very good tool where you can scalp maybe in and out when you hit the levels that I mentioned. If I say momentum's good, I want you to buy against the pivot the first time, and I'll tell you in the newsletter. Where does momentum change? Well, if you look down here, you see the support level that I have, this pink line here. That's my first support level that I wrote in the newsletter, and you can see that it's right there at 1359. I had my pivotal point was 1366. And I mentioned that bulls responded to lower levels, so they have momentum. They've gained momentum, and as we all know, the market's been going up by day, week, and month. I mean, we've rarely had 2 negative sessions in a row. So we're still in buy mode. If we get to buy weakness, we buy it. Now in this trade, what would you risk in a trade like this? Let's just talk about that. If I buy it at 66, I mean, ideally, I'd like to risk a trade below this first support area. And I chose that first support area because you see this yellow box here? That tells me the first hour trade. That's the most volatile, most liquid time of the day. So any extension after that tells me that buyers are very, very aggressive. And I use that in my automated system as well. That after that first hour, the extension the market makes after that, the markets tend to stay in that direction. Tend to. Doesn't mean it's always going to happen, but they tend to. But anyway, one of the things I would tell you that in this situation, what would I risk? I keep stats of what these first hour ranges are. So let's say the first hour range in the S&P, I believe right now is averaging somewhere around 6 points, or almost 7 points. So if you're scalping during the day, if you're a speculator, you want to risk about half that. So if you buy it at 66, you're probably going to risk a trade through about 63 or 62. So you're going to risk 4 points. How much am I going to make? Well, you're looking for, ideally, we'd like to see it get to our first support level. So we're going to risk about 4 points to make 8. That's not bad if you're speculating. That's not bad odds. Ideally, what I'm trying to do is make you, for every dollar you put up there, we want to try and make 4 of them. And obviously, that's not always going to work. But that's the idea, that as long as I can try and ride momentum, and we're always trying to ride momentum unless we get severe overbought or oversold signals. And those are things that I'll mention in the updates as well. But I don't have that. I certainly do have overbought signals, but they're not drastically overbought. And I'll show you some longer-term charts in a second to show you why. But anyway, so if I'm long here at 66, it's currently trading 70 right now. I'll tell you what, if you get about 4 points in an S&P trade and you had a stop of 4 points away, you should probably move your stop up to the point you got in. So now you're trading with the bank's money. There's no risk involved. All right? So it's just a good way to protect your profit. I don't know if the market's going to continue to extend up today, but if I can if I can save my profits or at least scratch a trade and only pay a small commission for that trade, and I've got money in it, you know what? That's how you play this game. That's how you day trade. Try and protect your money when you can. Risk 4, you got 4 in the trade. Don't let it become a loser. And I'll just go over how did I come up with these support and resistance levels? Well, we haven't seen these levels since 2007 in the S&P. So how do I come up with the resistance level? Well, this bracket that you see here, when I come in, and this happened to everybody in gold. It's occurring in crude oil right now. Well, not, but yeah, kind of. I use measured moves. So this bracket tells me what an average day's range is in the S&P. So if it holds this pivot point, there is potential for this thing to trade all the way up to 81. So if I'm correct, and this thing holds above this pivotal level of 66, I'm going to make about 15 points with a risk of 4 points. As a matter of fact, so you know what? And another thing, when people are really day trading, let's say you bought 2 contracts here, and it gets up to your resistance level. Take one off, move your stop to your price where you got in, and let the other one ride. Now you've already made a profit, and you're holding on to something to see if you can hit that full day's objective. So that's how I work. That's how I work these day levels. Okay, I'm always trying to go with momentum. And as far as support and resistance levels, as I mentioned, my support level shows this is where buyers were very active. This is where buyers were very active the last time they were there. The market exploded from that level. And, of course, somewhere near the low, look at this, last Wednesday, Thursday, and even yesterday, buyers were active there. So I wrote this as a support level. I wrote this as a support level because I know that buyers were active there. So what I'm doing is just showing you where I expect buyers to react. And that's how you read these newsletters. Listen to what I say about momentum, and well, you're seeing how I get the objectives. Now, so this is how I break down the day. But now let's look at how does that look by the week. So let's say you're a trader that wants to swing trade. Well, if you're a swing trader, certainly you want to be looking to buy momentum. I mean, when I look at these weekly profiles, you see these staple-looking structures here. See this structure right here? All right? That tells me where the bottom of fair value is for the week. And if you notice, only once in the past 10 weeks have we been able to even penetrate, let alone a high volume price for the week, barely, but the bottom of fair value for the week. So what I need to tell me that this trend has ended, or at least gone into a coiling phase, is that it's got to show me a close below the fair price, or the bottom of value for the week. The bottom of value defines risk in a rising market. In a falling market, the top of value will. And when we get a falling market, I'll show you that in the newsletters. But for now, momentum's still positive. Now I ask myself, how much is this thing going to move? If this is possibly the low for the week we've already seen in the S&P, well, I'm seeing that it's moving about down here in the bottom. I've got a median range that it's trading. And it says it's moving about 27 points a week. So let's say the low somewhere. So if I'm right, I mean, if momentum stays firm, and that's what's our low? Somewhere around 55. So that'll get us to where? 77, 82. So our objective for the week would put us somewhere about here if momentum stays strong. So that's the idea. Is if you're going to, you have to manage your time frame. If you're a day trader, know what your market moves in that first hour. Know what it moves in a full day. Know how to read momentum. If it's above the fair price, momentum's positive. It's below it, it's negative. Where momentum changes is at value areas that I show in the charts. So now, let's say we're long the S&P at, what was it? What did I say today? What was it, 66? 66. We're risking 4 points on that trade. And is it possible now, if you're a swing trader, if you're a day trader, we have a target of somewhere in the 70s. But if you're a swing trader and looking for a trade for the week, now you've got a target of 80. You're risking 4 points to make somewhere around 24 points if momentum stays firm. So today what we want to do is see the market stay above the fair price that it establishes today. It's an ongoing process. Always ask yourself, is momentum still firm by day, by week? And let's take a look at month. Now, here's another issue. Now, you can see the patterns, how they repeat in all time frames, but you can see the last 3 months, the market hasn't even got below the fair price for the month. And you see this price right here. That's a high volume price for the month so far. So a 1355 is our monthly pivotal point, and we've got 1 day left in the month. So I would need to see a close below 1355 to tell me that sellers are, that maybe the market's tired of going higher, that it's gotten too rich, or that sellers are actually operating again. And that doesn't appear like it's going to happen. I'm not saying it can't, but it doesn't appear like it's going to happen. Now, what does this thing move? It moves about 82 points a month, and I'll tell you what, 82, we've got a low of somewhere around 1,300 in the S&P, and what's our not only our monthly objective, our weekly objective, all come in around 82. So there's a lot of reasons to think, man, there's still room to run by the week, the day, and the month. Why should I be selling this market for anything other than a very short-term play? If you want to scalp from the short side, I don't have a problem with it. But just know when you're fading momentum that you take smaller profits and you keep your risk tight. And let's just look at one more time frame. So like I said, I'm always aware of what's going on in a number of different time frames. And I believe the chart that I sent out this morning was a yearly chart. And you can see how the last 2 years, the market's found its bid right off the fair price from the previous year. Have we gone high enough to attract sellers yet? We're not getting any kind of signal like that. So what would I expect the market to go to? Where is the next resistance level? I have to go all the way back to 2007 to look for a price that might give me some resistance. And resistance and support levels typically will come, as I mentioned, in these very high volume prices that you see here, and these very low volume prices that I have in my resistance too, which is roughly about 1381.82, which would get us our objective by day, week, month, and, well, I don't know if it would for quarter, but it certainly wouldn't by quarter. But so that's how I write the newsletters, guys. You know, if you have questions, feel free to contact me. You have my email address, or contact one of the guys at Power Trade, and they'll get you to me. And but that's pretty much it. So keep looking at newsletters, and if you have questions, please send them back to me, and I'll do my best to answer them. So thanks for showing up, and I'll talk to you soon.